RainFin is different to a bank in its fundamental elements. A bank traditionally is an intermediary. They borrow money from investors, they pay them a small return, and they re-lend that money out to people who need it like borrowers, and they charge a huge margin for doing that, a huge margin and a huge leverage. Banks are made up of very simple business models. Get money as cheaply as possible and lend it on as expensive as possible and make as big a profit in the middle. RainFin is not any of those things. RainFin directly connects an individual investor with an individual borrower and takes very little transaction fees for doing that, therefore enabling these two parties to share in that profit amongst each other, making borrower rates cheaper and investor returns higher. The relationship with Barclays is a complex one. We are a peer-to-peer platform or new age with a bank, a traditional finance company. So our relationship with them is twofold. The first is they have investment in our business. They're a 49% shareholder in RainFin, which is fantastic for us. It helps us to understand all the issues that we face with security, the issues with funding, the issues with how we're going to grow our business. This is really like having a strong partner on board to ensure we can grow this business for the next 20 years. Secondly, Barclays Africa is a user of our platform. They invest into loans just like you or I would invest into those loans as well. In this context, we had to go through the normal procedures of convincing them that their money is safe, convincing them that we know what we're doing in terms of credit scoring, convincing them that these legalities of the platforms all work. All the same questions we get from a retail investor, individual on the street, we needed to answer to this large institution to use our platform. So getting them on board as a customer was a very important step in the migration of RainFin from being an emerging technology to a mainstream platform.